Last week, NYC-listed fintech firm Block announced that it surpassed $200 billion in credit provided to customers across its suite of credit products. That includes Afterpay, Cash App Borrow, and Square Loans. Well, joining me now with more is Nick Molnar. He's co-founder and CEO of Afterpay, as well as global head of sales and marketing at Block. Nick, great to have you on the show this morning, joining us from Los Angeles.
Thank you for having me.
Great to have you here. How big is this milestone for Block and its customers?
Yeah, I mean, look, it's a fantastic milestone for our customers and for our company. I think what's really important is how we've really reimagined how to lend money. You know, whether it was the start of Square Loans, which was providing a working capital loan against a seller's transaction volume, or Cash App Borrow, which is lending against money that's flowing through the system, or Afterpay, you know, which has completely reimagined how finance prevails, which disables someone's account the moment that they're late on one installment payment, which really flipped the credit market on its head. You know, a lot of those components are the factors that have really driven very significant growth over recent years, and incredible to pass that milestone.
Your firm, Afterpay, announced that 96% of U.S. Pay in 4 customers who shop between Black Friday and Cyber Monday did pay off their purchases early or on time. What does that tell you about how Americans are spending?
I think, look, it's really important for us to engage and provide a valuable service to our customers, which is illustrative of the $200 billion milestone. But almost what's more important to us is making sure the consumers are being responsible in how they're engaging with us. And so to see 96% of our installments being paid back on time, 98% of installments and orders having no late fees, really illustrates the power of our product. Our loss rates have sustained below 1%, which, given the growth curve, has been a very attractive rate, which is kind of contrary to the broader financial services market that has seen very different loss profiles. So, really proud of both the origination number, but also that our consumers are engaging with us in a really responsible way. And a lot of that, as I mentioned before, just comes back to how our products were fundamentally designed to be different to other financial services products.
The Consumer Financial Protection Bureau just reported that credit card balances exceeded $1.2 trillion in 2024. What are you seeing when it comes to credit trends?
Yeah, I mean, look, we established Afterpay because millennials had voted with their wallet. They had voted to decide that they wanted to use a debit card, not a credit card. In many ways, millennials bucked the trend. And so, we flipped the model on its head, where we charge the retailer a small fee instead of charging the consumer, which is, really the opposite of credit. No credit product disables someone's account the moment that they're late on one installment payment. And so really, as I mentioned before, the growth has been a response from consumers saying, you understand how I want to spend my own money. You understand, how to put checks and balances in place like Afterpay has. And it's been really great to see the demand for buy now, pay later continue to go more mainstream as time has progressed.
We understand that Gen Z is looking for alternatives to credit cards. What is that generation gravitating towards instead?
Yeah, so debit cards is definitely the most popular now. Over 90% of Afterpay's transactions take place on a debit card, not a credit card. The idea of revolving, compounding credit for the younger generation is definitely a thing of the past, which is a really great thing to see. Afterpay's outstanding balances are a couple $100 compared to an average outstanding credit card balance of a couple $1,000. And so you're seeing, shorter duration loans that are paid back quickly, that are lower order value, really start to be the popular trend. And it's great to see Gen Z and millennials really voting with their wallet and shifting macro behaviors.
Nick, I see here that Afterpay notes 90% of purchases being made with debit cards versus credit cards. Why is that?
Yeah, I mean, look, post-2008 financial crisis, we really saw a trend away from credit to debit. And if you think back to those days, it was really people telling the millennial cohort, don't spend money that you don't have. And That trend has sustained. It really accelerated during the pandemic. And if you think about why, as I mentioned before, if 100% of people pay back a credit card on time, the industry wouldn't work. And so incentives are very misaligned. And so millennials and Gen Z have really, lent into that reality, and they prefer to use their debit card over their credit card. And there are incredible programs like Afterpay now that allow the benefits of a credit card with not the downsides of a credit card. And that's where consumers are now spending their time and building their financial relationship with.
Mm-hmm. We've seen tech companies and companies in general mandate more rigid returns to the office, but Block is taking a different approach to the future of work. Elaborate on that for us.
Yeah, we've seen a lot of benefit in attracting some of the best talent in the world. We are often in the office, but we have, a hybrid first policy where, we're focused on the best talent, agnostic of location. But then even more recently, as of, a couple of weeks ago, we just opened an office in LA, which really, brings together the science and the culture. And we have incredible teams in Los Angeles. We have over 400 people in LA that are now starting to go into the office. So, really have a hybrid policy, and we're seeing, immense benefits from having that type of flexibility and attracting really great talent.
Nick Molnar, co-founder and CEO of Afterpay, as well as global head of sales and marketing at Block. Thank you so much for joining us early on the West Coast this morning.
Thank you.